You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Stocks like BHP, Rio, Glencore, in the long run are good value. They're not going to make as much money as if you go and buy some Canadian or Australian mining stocks, but I think they're good value, on the conservative side. Number two, I think that the uranium stocks, if everything works out, they have huge potential.
Thanks for tuning in to Mining Stock Education. I'm your host, Bill Powers. Joining me today is Marc Faber. He is the editor, publisher of the Gloom, Boom, and Doom Report. His website is gloomboomdoom.com. Marc, thanks for coming on the show today. You're a well-noted commentator, and you cover the commodities, the precious metals, macroeconomics. So I'd like to start off by getting your perspective on whether we're going to see a commodity supercycle. I've read articles saying that, yes, we're going to see that assuredly, and other people saying, no, the jury's still out. What are your thoughts regarding this topic?
As you know, we had the bear market, long-term bear market in commodities that came to an end in 1999, 2000. And then we had a very strong, powerful bull market for oil until 2008 and for gold 2011. Then we had a correction for the precious metals until December 2015. And then we took off again. And since last August 2020, we're down quite a lot. Gold was over 2,000 and we dropped to around 1,700. So I think if I look at, just talking about precious metals, if I look at precious metals, I think they are still in a bull market, yes. It would be unusual for precious metals to only have a bull market of, say, around 10 years, 1999 to 2011. I think that bull market will continue, as well as for other commodities. But we don't know how high, because commodity prices will depend on demand. The production side will not go up a lot, and the demand will depend on industrial production, and industrial production will depend on the global economy. That we don't know for sure. One thing we know for sure is that the geniuses at central banks will continue to print money. And so I would argue, we don't know for sure, but it's likely that because of the money printing, prices of commodities will be relatively well supported. I can't see gold tumbling by 80%. Can I see Bitcoins going down by 80%? I don't know. I wouldn't bet on it, but I don't think it will happen.
Marc, do you think that even if we can't predict the demand side for a lot of these commodities, are there any commodities that you're looking at where you can look and say there's a supply crunch, so just for that alone, I'm bullish on it?
Yes, I think the supply is limited, in some sectors of industrial commodities. Because don't forget, a lot of industrial commodities have been weak until just 6 months ago. And so during that period of time, not much was developed in terms of new properties. And we also have a phenomenon at the present time, and this is this additional demand arising from climate change investments. You understand? People think they will reduce the demand for oil by making all kinds of investments in other sources of energy. But maybe these sources of energy will use much more industrial commodities than would have been used had we just continued to essentially burn fossil fuels. So my view is here, We don't know 100% outcome, that this is a sure thing, that this and that will happen. We don't know that. But I think it's quite likely that if we look at the quantity of money that has been printed over the last 20, 40, 60 years, we can say that commodity prices are not particularly expensive.
What about oil? Do you think we see $100 oil this year?
Yeah, it's quite possible, quite probable. I think in order to become environmentally friendly, you will need to burn more oil. As paradoxical as this sounds, and maybe it sounds to some people stupid, but I think the climate change fanatics, they have overlooked a few important factors in their equation.
So do you not invest in any renewable energy sources?
Actually, I'm a bad example because I own some coal stocks and I own oil stocks and I own bonds of oil-related assets and so forth. So, for that, I'm the wrong example.
What about uranium? Do you invest in uranium at all?
Yes, I don't consider that to be necessarily renewable.
Correct, yes.
But I think uranium has a great future price potential. But again, you have to see very clearly. The Greens, the people that are environmentally friendly, they don't like uranium. But the fact is that uranium is the environmentally most friendly commodity. You understand? You should all own some uranium in your portfolio, either by some ETF or by some stocks like Amico, which I owned from time to time. At the moment, I have no position, but I intend to buy again.
Mark, you may have already answered this question, but where do you stand on the inflation, deflation, stagflation debate?
If we look at interest rates, they peaked out in 1981 on the US Treasury, on the 10 years, at over 15%. We've been in a bear market until, a bear market for interest rates, in other words, interest rates coming down. We've been in a downtrend for interest rates, that's a better expression, since then, in other words, 40 years. And it seems to me that we made a long-term low last summer on the 10 years, I think it was around 0.55%, around that level. Since then, we've gone up. I think we've gone up too much. I think a correction is coming. So as a trade, you may consider buying, say, the TLT is a long-term treasury ETF that could rebound here. It's dropped almost 20% from the high. So, but long-term, I think if you ask me in 20 years, Mark, where do you see interest rates? And I'll tell you, I'm not sure I'm going to see them in 20 years' time, but just in case I'm a survivor, then I'd say that the trend will be upwards. There's no question about this.
Doré Copper Mining is a premier, near-term, high-grade copper and gold redevelopment opportunity with tremendous exploration potential only 14 kilometers from the town of Chibougamau in mine-friendly Quebec. Doré Copper is debt-free and owns a 2,700-ton-per-day mill with an 8 million-ton tailings facility ready to be used. There is already power to site, and it is accessible by paved highway and rail. Doré Copper aims to produce a profitable hub-and-spoke operation of over 100,000 gold equivalent ounces per year, or over 60 million pounds of copper equivalent by 2024. Because of the existing infrastructure and location, a low capex is anticipated to recommence production. Doré Copper trades under DCMC in Toronto and under DRCMF on the OTC. To learn more, go to dorecopper.com. That's dorecopper.com. When it comes to U.S. equities, would you call this a bubble?
Some sectors are in a colossal bubble. Other sectors are not in a bubble. But because the most important sectors are in such a bubble, once the bubble burst and the FANG related stocks, semiconductors all break down, I suppose it will knock down the rest of the market as well. Some sectors, also GameStop, nobody can tell me that this isn't the bubble. It's a colossal bubble. Or even if someone says, well, Bitcoins are not in a bubble. Yes, I can believe that, because the argument is that there's a limited supply, and then the money printing is endless. But the behavior of Bitcoins, in the sense that they've gone up so much in such a short period of time, you could essentially argue that they're in some kind of a bubble. You understand? This is different. If you look at the price of gold and silver, gold was at, say, plus minus 300 in 1999. We're now at plus minus 1700. We had upward moves, corrections, upward moves, and so forth. So nobody can make a case that this is a bubble. There was maybe a bubble in 2011 when a lot of speculators drove up small mining stocks. But personally, if you came to me, and I don't know you, and you said, Mark, I'd like to invest for the next 10 years in something, should I buy Bitcoins or should I buy gold or silver? I tell you, why don't you buy gold and silver and platinum? Because with these three commodities, I'm pretty sure that you will not lose a lot of money. You may not make as much money as with Bitcoins and other cryptos, but I think a fairly safe assumption would be that over the next 10 years, especially following the correction these commodities had, that they will be higher than they are today. Without knowing your financial objectives, if a certain financial security is your objective, then I would go essentially for precious metals.
And precious metal stocks as well?
Yes, but as you know, precious metal stocks are very volatile, and there are times when the speculators run into one stock, and then it runs up along with the price of gold or silver, and then there is a correction, and then another stock runs up. You understand? It's not with precious metals, gold, silver, platinum. One of them for sure will do relatively well. The one or the other will outperform, and the one will underperform. But with gold shares, you have all these issues about nationalization and expropriation and cost overruns and changing regulations and so forth. Is a lot of things that can go wrong. But if it goes right, you can make a lot of money. So I know quite a few people who invested in gold shares, in mining stocks. They've become very rich by just investing in gold and silver. They wouldn't have made that much money.
So what, in terms of a portfolio breakdown, what do you recommend in terms of physical precious metals and also the precious metal stocks?
This is very much an individual question. I prefer physical, but because I have quite a lot of physical, I also have some gold shares, and I use gold shares more for trading purposes. In other words, if I see that there is an opportunity on the upside in metals, then I may buy gold shares that look attractive on the charts, because within a day or two, they can move 10, 15%. I don't see gold and silver moving up 10, 15% in just one day.
Yes. Do you do any volatility trades? Like, what are your expectations for volatility this year? And are there any trades that you're employing right now?
Volatility will go up a lot, not just a little, a lot. But equally, I don't think this is a very good environment to make money in markets. I mean, I tell everyone, if you have money and you work for your money, in other words, you put some effort up to have this money. You didn't just get it from heaven or from your grandmother or uncle and so forth. Then one of the objectives should be that you don't lose it. Never mind making a huge fortune out of it. You can live with a small fortune, but it's better to live with a small fortune than to lose it all. You understand? So my recommendation to an individual would be, okay, here I have my allocation to precious metals. Maybe 30% of the portfolio, maybe 50% of the portfolio, or only 20% of the total portfolio, including real estate and stocks and so on. And of that, you may say, I will speculate with 30% and 70%, I will invest conservatively. Or you may say, I don't care. I'm smart and I'm young. I earn a lot of money. I can always earn a lot of money because I'm so smart. And so I will take huge risks.
That makes sense. Okay, so because you're speaking to an American who's heavily exposed, myself, to precious metals and resource stocks, if there'd be one place that you could point me to a potential high return investment anywhere in the world, where would it be?
You know, stocks like BHP, Rio, Glencore, in the long run are good value. They're not going to make as much money as if you go and buy some Canadian or Australian mining stocks, but I think they are good value, you know, on the conservative side. Number two, I think that the uranium stocks, if everything works out, they have huge potential because they've been coming down for years and they've been bottoming out now for maybe 5 or 10 years. They never moved. And I think now they just started to move. So I would say this is a sector that is out of favor and where there is some opportunity.
Marc, before you go, what will investors find at gloomboomdoom.com?
Optimistic forecast.
With the word doom in it?
No, they have. I have a monthly website report, and I have also the Gloom, Boom, and Doom report, which is more detailed and also more expensive. So there are two choices, basically.
Excellent. Well, Marc, I really appreciate your time. I know it's late where you are, so thanks for staying up to chat with me.
Well, it's my pleasure. Take care. Bye-bye.